Well, folks, we've got another economic study to review. It seems that the price action we've seen in gold over the last several months has resulted in an endless amount of dust being blown off what were basically stagnant projects as operators waited for the price environment to improve. The latest revival comes from TriStar Gold, who has issued an updated prefeasibility study for their Castelo de Sonhos project in Brazil. Let's dive in. Don't miss the Rural Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Okay, let's back it up a bit here. To be fair, revival is a bit of an aggressive term. And that's because the company has been rather dormant in terms of development because permitting was slow in coming. The original pre-feasibility study was released back in October of 2021, following which TriStar focused on advancing towards filing for what is referred to as an LP, or preliminary license, for the Castelo Gold project. That application, which includes the completion of an environmental impact assessment, was completed back in July of 2022. And the approval process on that permit, which represents one of three stages in the overall permitting process, wasn't granted until the end of August 2024. And then a little over a month later, the granting of that permit was challenged by the federal public prosecutor over matters related to archaeological studies and indigenous component studies. Well, that matter appears to have been settled by the end of 2024. It was clearly a massive obstacle and headache for TriStar. And in the interim, inflation ravaged the globe and the price of gold skyrocketed. Under the 2021 edition of the study, a base case price of $1,550 an ounce gold was used. In this updated model, a base case of $2,200 gold was used, alongside spot metrics at $3,200 an ounce gold. In other words, we were due for an update here. So let's get into it. Okay, so before we get into the economic aspect of the Castelo de Sonhos project, let's first look at the model. The current model for the proposed open pit mine is based on a two-stage approach, which will ultimately see the construction of an operation that will produce on average 121,000 ounces of gold over an 11-year mine life. The initial 6 years of operation are expected to produce on average 146,000 ounces of gold a year, while the second stage will see production fall to an average of 91,000 ounces a year from year 7 through to year 11. This multi-stage approach is a result of the higher-grade Esperança South deposit planned to be mined first, followed by the Esperança East and Center deposits in the later years, which contain lower-grade resources. In the case of the former, grades of 1.3 grams per ton gold are expected, which declines to 0.8 grams per ton gold in the latter years. Mining is to be based on conventional open pit methods, while processing capacity, meanwhile, will remain at a flat 10,000 tons per day or 3.6 million tons per annum over the life of the mine. The flow sheet, unchanged from 2021 to 2025, calls for whole ore agitation leaching, with the processing method to result in the production of doré bars that will be shipped to third-party refiners. Recoveries are estimated at over 98% throughout the entire process. Over the life of the mine, Castelo de Sonhos is currently expected to produce a total of 1.3 million ounces of gold, which compares to current mineral reserves of 1.4 million ounces of gold at a grade of 1.1 grams per ton in the probable category. Additional mineral resources of 1.8 million ounces of indicated gold at 1 grams per ton and 700,000 ounces of inferred gold at 0.9 grams per ton are believed to exist on the property as well. All right, so when we say that this is an updated pre-feasibility study, what has really been updated here is the costing. Nothing else in terms of project design here has really changed otherwise. Under the revised model, initial capital costs are expected to total $296 million, as compared to the prior estimate of $261 million. In hard dollar terms, the largest line item increase here was seen at the plant, with costing rising from $166 to $187 million, a 13% increase. Outside of the plant, the largest expense here is contingencies at $49 million, followed by the mine itself at $37 million. On a per ounce basis, cash costs are estimated at $10.80 as compared to the prior estimate of $877 an ounce, while all-in sustaining costs have risen to $11.11 from $900 an ounce. After reaching out to TriStar, the rise in costs are said to be entirely cost inflation related over anything else. And from a net present value perspective, the NPV at Castelo de Sonhos has jumped from 320 million on an after-tax basis to 603. The IRR has moved from 28% to 40%, while the payback period has fallen from 2.8 years to just 2, all of which is based on a 5% discount rate. Total cash flow, meanwhile, has climbed from 524 million to 934. Again, the major differences overall here is that whereas the former PFS used a gold price of $1,550 an ounce, the updated version uses a gold price of $2,200 an ounce. For what it's worth, that net present value at $3,200 gold balloons to $1.35 billion, while the IRR jumps to 72%, which is an incredible rate of return for a mining project. All right, so let's wrap it up. TriStar had a bit of a rough go of things after the release of their initial pre-feasibility study. But with any luck, they've now turned the tide with that LP permit now in hand. To meaningfully progress the project forward, they now need to complete a feasibility study, which will be used to obtain the required installation license for Castelo. When asked, TriStar told us that they are currently estimating about 3.5 years until production on site. And as for funding, their first choice would be a partner that has the know-how to actually build and operate a mine, which is a form of experience that they simply don't have. On that front, we were told that discussions are always ongoing. All right, everybody, thanks for watching. If there's stories you want us to cover, as always, let us know in the comment section. We read every comment, and we're always looking for ideas to talk about on this channel. You know what? Today, we're having a little bit of a hard time thinking of what to do. So, guys, we appreciate any thoughts. What's happening in the mining world that we really should be covering? Let us know. Also, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thank you for watching.